Good morning. Hey, it's, Thursday, the 23rd of May, 2019. It's your daily Forex trading strategy session, hosted at the Forex.Today YouTube channel, sponsored by Traders Way. Oh, what the? That's crazy weird, right? Yeah, this is the last day for this computer. I'm sending it off to computer hell. Popping the new one in, so I thought I would see what it could do. So anyways, hey, we're going to do dollar pairs, yen pairs, gold and oil. Also want to talk about the FOMC meeting minutes that came out yesterday. And I want to talk about whatever you want to talk about because you are my sweet baby. So let's go! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Jumbo! Ni hao ma! Ohio! Jason's like, I'm so glad you introduced me to the COT report. Hey, my pleasure. Pay it back. Visit tradersway.com and open an account today. Then you can go in your back office, download MT4. You can come back here in the description below. You can download my chart templates. And it's your way, the Trader's Way. So very cool. Welcome to the family. Welcome to the community, everybody. If you're new, please subscribe. If you're an old veteran, please bring a friend. Smash that like thing. Apparently it's important. YouTube needs it. So could you do that? Could you spend like the half a second, since I do 1.5 hours a day? Would you spend like the millisecond to just click that? It's important. It's important to YouTube. It's important to the community. Keeps us alive and thriving. So all that. Would you do that, please? Cool. So, like I said, if you have particular questions, that would be helpful. But I'll go through kind of all the majors and all the minors and all the in-betweens and cover what you need. J-Dog says, already have an account. Thank you, sir. Namaste. Got the hat thing going on today. I don't know why. Who's to sponsor my shirt? This is my hedge fund, my U.S. hedge fund. But that's from. So I don't have an onshore account anymore. Ugh. So anyways, hey, yeah, let's just start with Aussie dollar. Boom! There it is. Aussie dollar. All right. Let's take a look. Okay. So now you need an up, a down, and that's your 1, 2, 3 if you're a bull. What do I know about pig today? Pigs get slaughtered? Right on, Jay. Yeah, education is costly. Oops, I can't get rid of this. Apparently most people, gee whiz, I can't get rid of this. I have to do this, I guess. Most people at Harvard are on student loans. I was surprised by that. Most, like 2/3 of the people at Harvard are on school loans, receive financial aid. I thought, oh, it was all rich people, but thought that was pretty amazing. Maybe it's just so cheap. I don't know. I don't know if they still do that. If government student loans are so cheap, like you might as well just take the money. But then again, you wouldn't qualify for it if you had money. Like I couldn't qualify for a student loan. But it's interesting. I always thought Harvard was all just rich kids. Apparently it's not. Now, they all look pretty rich to me. But, all right. So anyways, we had two things here that we talked about the last few days. If you're going to be a bull, this is the right price to look for a reversal pattern. Okay, we haven't gotten it yet, but this could be the double bottom, higher high, higher low thing that you might be looking for if you are a bear. However, with that being said, or I meant bull here. However, with that being said, bearish trend is still continuing mission, right? Well, in this scenario, I still prefer to break through this and then up and then down. And maybe that's a mood trade kind of thing. You know what I mean? Morning, Abel. Does anyone want to be a bull in this? I can't imagine that scenario happening. But I suppose somebody could just out of price action. So even then, so let's kind of do it this way. For me to be a bull, I'd want this. It's still hard to believe that that would happen, but it could. Or, right, you let it break, come back in there. And look how helpful the pivots are. They're like not helpful at all. The man of many talents. Wayne, is China really paying the tariffs or Americans? Well, everyone pays tariffs. But I read somewhere, and I don't know if it's true, but China's losing $22 for every one American dollar that's lost. But you read that in America, and China is probably the opposite. Look, all of this is really normal. Okay, we discussed this 2 weeks ago, didn't we? Where I did the game theory of it. Right? Do you guys remember? Okay. So, how do you do? You would write this as, how about like deal, no deal? Okay, deal, no deal. Okay, and I had all these numbers and stuff, and I showed that there was a sort of a strict strategy that will get you to this defect effect. Okay. So you're always going to get the US and China not agreeing. That's just how the game gets played. There's no chance at all in a fair game for them to have a lasting deal. Because the way that the numbers are rigged, and you have to put in probabilities and payoffs, the way that the game is rigged is that you should fake to the other partner, which is called a signal, right? Like, let's do a partnership, and then you defect, and on the short run, you're going to win, okay? Now, some people would say, if this is an ongoing, repeated game, that wouldn't happen because you'd move tit for tat, but then that still leads you to defect effect. If you played forever and ever and ever, then it wouldn't lead to here, but it has to be infinity or not infinity. And if it's not infinity, and I don't know if any deal is infinity, then if they're going to cheat at the last second, you should cheat before they cheat in the last second, which means they should cheat before you cheat before they cheat in the last second. And it goes all the way down to today. They should just cheat today. So it doesn't matter if we played 1,000,000 times, 100 times. Either way, it's less than infinity. So how do you get past this defect, no deal scenario? Tariff, collusion. And this comes from monopolistic competition. And you're like, how could you have competition if you're monopolistic? You have, let's say, two major powers, Nike and Adidas, and you can't get shoes from anywhere else. Mono competition. Okay, how do you do that? Well, then they decide, instead of competing with each other, they say to each other, let's both stop advertising, or let's both have the same price. Instead of Adidas being a little cheaper than Nike, and then Nike goes a little cheaper than Adidas, and they work their way down, which capitalism is supposed to do, so that you get awesome shoes. And there's no economic profit. There's financial profit, but there's no economic profit from either. So instead, they collude, which is illegal, and they say, hey, let's both keep our prices high, and we'll both be better off. But they have to collude, right? So to get past this, China and the United States have to set up an artificial scenario, which is what negotiations are, to say, let's move us to deal. Okay? And so we're always going to be stuck here until they're at the point where they're both desperate to do a deal. And right now, they're not desperate enough to collude. That's all. It takes time. I think what's happening is Trump is delaying because he wants a deal closer to the election. I think that makes sense. Oligopoly? Yeah, I can go with an oligopoly in that scenario. Well, maybe, Jimbo. The interesting thing about gasoline stations is it's not quite right. Like Ryan and I were having a conversation yesterday, and I was talking about rent and Starbucks. Okay, so you pay $4.37 to buy yourself a soy latte. Okay, how much is Starbucks willing to pay a landlord for rent? They'll pay anything as long as they cover their 33 cents in cost and the 17 cents in profit they're trying to make. So if Starbucks can make 50 cents on your $4.37 purchase, they will pay everything else in rent. So let's just dumb it down a little bit and just say the landlord makes $4 on every latte out of a $4.50 per purchase. Isn't that amazing? So do you want to own Starbucks stock? Do you want to become a franchisee? I don't even know if they do this, but do you want to own a Starbucks? Or do you want to own a building that leases for 25 years a space to Starbucks? And you wake up in the morning and you're like, oh my God, I hope they sold a shitload of coffee because it's all mine. Huh? Welcome to America. Welcome to America. So gas stations don't quite work that way, right? So that's really interesting because there's taxes involved, and you have to do price floors with taxes, and that gets really strange. right? So you got like a free market and stuff, but then the government comes in and all that kind of stuff. So you got dead weight loss on all that, and it's just. And then why don't they have a competitive price? And why is it, there's all these different things that make it too complicated, but whatever. Let's not get sidetracked on economics. Okay, so Aussie's weak, right? So what's going on here? Oh, CAD is even weaker than Aussie. The Reserve Bank of Australia told us last week, like, yeah, we're probably going to cut. Crikey! So how could it be even weaker than that? Well, maybe it's just an exhaustion, right? By the way, here's that great example of, wait for it to break and then sell. Okay. I'm always worried that every up when you're in this scenario is the recovery. So I am, remember, the main message I've told you over these last couple of weeks where lots of the yen pairs are like this is this whole area here is an area of caution, caution, caution. And you should reduce your aggression. Okay. When you're in this zone, so I use the tsunami, and I hate using the tsunami as an example, but in the example of tsunami, you're not going to try to swim up against the tsunami. But if you jump in, your main goal should be survival, not getting a selfie to put on Instagram. Look at me, I'm in the tsunami. That would be very bad. So once you're in here, this is all about survival. So I think everything is a danger. Every up is a danger in this scenario. Now, you can take these shots, that's perfectly fine, but it better roll over first before I take a shot, okay? Like it did here. And it happens almost every time, which is the great thing about trading. It happens almost every time. Look at this. Boom. Okay? Gives you a second chance. Oh, you missed it? That's okay, Wayne. I'll come back for you. Almost every time. Yeah, Jason, if you have more bears and less bulls, it's not going to be good. Nobody's holding up and people are pushing it down. So like the way I look at it, guys, the way I look at the market, and it's in one of the videos, in one of the training courses, I think it is anyways, Kurt Worley did a great presentation on support and resistance. He's got pictures of like people, much nicer than this, of actual people, and they're holding price up. It's literally a crowd of people holding this floor up. Well, I guess in this case it's a ceiling, right? I don't know how to do this one. I guess they're upside down. Okay, so it just comes down to the number of people versus the other. It's almost like a tug of war. If at one end of the rope you have 10 people and at the other end of the rope you have 2 people, who's going to win the tug of war? Right? So if you see these guys go away, we're going to be market neutral, right? And that change is going to be important. Because remember, it's real cash positions on the exchange. Now remember, we're only talking about truly United States traders, okay, that are trading futures contracts. So now there are futures contracts traders in the United States trading over an exchange. Now that used to be a big part of the market. Now it's not a big part of the market in the grand scheme of things, but it is something. It is what it is. It's information. You make sure you understand what the information is, make sure you understand how to use the information, and then understand the limitations of said information. Okay. All right. I think the COT data is most useful to understand maybe why a market is moving the way it is, to understand, is it bulls buying or is it bears taking profit? Because it'll look the same on the chart, but it's helpful to know what's going on. So I can think, well, if it's just bears taking profit and it's rising, then those bears may want to sell again because they did so well the first time. They're probably going to want to do what they did before. And these are bigger traders, so they're probably using not even daily charts, weekly charts. So maybe in 2 or 3 months, they're going to do it again. The other way of using it is in a scenario that may only happen every few years. It's when the market is so ridiculously bearish or so unbelievably bullish. And then you get to like sort of a perfect storm. The seasonality comes together, right? And the extreme positioning comes together. Trader psychology comes together. Technical analysis comes together, where there's a trigger and an avalanche, and an astute observer of the markets will see it coming a mile ahead. Sort of like, you know, you're skiing and you look up and you're like way at the top of that mountain. You can just look at it and say, you know, that's an avalanche hazard. Like, it's not happening now, but one loud noise, one more snowflake, boom, it can come down, right? So you can just kind of tell. And you're like, well, it's the right kind of weather, you know, and all this kind of stuff, and the wind is going in the right direction, and just everything tells you that the probability of an avalanche is increasing exponentially. So you can do something about it. Okay? So in that case, COT data could say, wow, this is really crazily overbought, and we're running into whatever seasonality, and look at the monthly pivots. You know, this is going to get some people out, which will get other people out, which will hit stops, which will cascade, which will get some other people out, which will get some panicking going. The bears will jump in, and now the bears are selling into a falling market, and all of a sudden, tsunami, or in that case, avalanche. And it really does happen that way. It's pretty amazing. You can almost see the stops going click, 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 click. That's why I say, if you're not prepared, don't trade against it, God forbid, because there's nothing you can do to survive that. Right? So you're either prepared and you've taken actions before a time, or you should just get the heck out of the way. Okay? So anyways, enough of that. What happened to the... Oh, I'm there. That's cool. Look, that's me right there. Really? How funny. Really? All right. Okay. Story of my life. So, very neutral. Bulls bought this, bears sold this, nothing happened. So I'm already thinking next week. Is it Thursday? Yeah. If you can't see it on Thursday, you're not going to be able to trade it on Monday. Or like I like to say, you ain't going to trade it Monday. FX Pipper, the way I think of it is this. If bears are getting out and made money, and you would know that because it's been a downtrend, so of course they made money, right? They're going to want to do it again. It's sort of like a kid on a water slide. He comes splashing out the other side. He's like, again! Well, it takes time to go all the way back up, right? And then, whee, comes back down again. Going up the stairs. Boom, 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 boom. Wait in line, wait in line, wait in line, wait in line. Chow. Comes out the bottom again. Okay, so that's how I think of it. So they got to go back up. That's why sometimes it takes weeks, right? Sometimes it takes weeks because you got to climb the stairs and wait in line for the right opportunity. Well, thank you, Joe. Yeah, I'm trying to anchor, right? That's why I do this. Like the kid comes splashing out, and he's shaking his arms again, and then he has to climb up the stairs, around and up and up and up, and standing in line, right? I'm trying to anchor these things. So it takes time to wait your turn because we know successful bears sell at resistance, right? What do amateurs do? Nothing consistent. So we don't have to worry about them. Amateurs do nothing consistently, so they're all over the place. So what does a large institutional investor do that has loads of money? Well, they wait for the right price. And they probably are not on your 15-minute chart, right? They're thinking, what should we do this month? What should we do this quarter? Right? They're like out here. So anyways, yeah, so they want it to rise before they sell it, right? Cool, so they're going to sell. And that's why I think it all comes together that way, right? So, right, the down, 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 take profit. Right now they need the up, up. The up, up might be 2 weeks. Okay. So that's how I think of it. Honestly, that's how I think of it, that kind of thing. They did it, they enjoyed it, they're going to do it again. Even if it's wrong, they're going to do it again. Okay? Because they're not that bright. They're little kids with billions of dollars. Yeah. So, anyways. So I look at this and I say neutral. Okay? So we know this. Bulls buy here, bears sell here. We know this. It's totally easy, absolutely predictable. It's not like you could predict it. You're supposed to be predicting these prices, right? If you don't know how to do this, you need to take the swing trading course. And if you need to take the swing trading course if you're going to know how to trade. So bulls have already bought in it, bears have already sold it, and we haven't gone anywhere. So a bull might try again here, and he's thinking next week, or she's thinking next week, but also this group is thinking next week. So, you know, there's sell orders here and there's buy orders here. I already know this. I just don't know how many and the conviction behind each. But I can tell you a bull is doing this. Okay, I know that. Conversely, a bear who already sold here, see this bull bought there. So now a bear is going to sell here, and they're going to sell here, right? And they're going to probably sell there. And there's their target. I already know this. I just don't know how many there are. Don't say 3 touches, Greg. $12.70. Yeah, well, that's what I'm talking about. Right here. But don't talk to 3 touches. Don't say rules like that. But I don't believe in them at all. Remember, when the CFO of Toyota Motor Company is thinking about moving money from the U.S. subsidiary back to Tokyo, they're not playing rules of, oh, it has to touch 3 times and all that kind of stuff. Don't worry about that, right? They're not, that, yeah. Right, just imagine this is a 5 or probably more now, right? Probably $7 trillion market. Most of it is simply business. Okay? Simply business. That is the vast, 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 vast majority of the foreign exchange market. Malaysia selling oil to Japan. That's Forex. Okay? Huawei executives sneaking money out of China to Hong Kong, then to Singapore, and then to Canada to buy real estate. That's the foreign exchange market, right? The vast majority of it is not you and I buying like, oh, 3 touches, and then it's, don't trust the reversal unless it touches 3. I understand the thought process, and it's not hurtful, but I'd rather you focus less on that, because you're right, this is support, so we agree with that. But that's just a little bit tidbit of information that probably you don't actually need, and I'd rather you learn something else. That's all. So I would hate for you to throw this away because you're like, oh, well, that's only a double bottom. I need 3 touches. I've never once said 3 touches. So you can erase it. But don't throw away a double bottom because of a triple bottom. And by the way, I'll take a double bottom over a triple bottom any day, because to triple bottom means we're essentially consolidating. You see what I mean, Greg? And I don't want to consolidate before a break. Now, you might say, like the example in my book where we make a high. Let's do this in a different color. Okay. So we're cruising along and I'm doing it up, and then we hit this, and then we hit this, and then we hit this, and then we kind of Okay. So instead of saying, 3 touches and then shorts, or triple tops are better than whatever. Some people will say the more it touches, the better. I disagree with that. That's why I never once said it. Okay. But what did I say in the book to describe this in a way that you wouldn't just simply try to memorize a rule? Because most people memorize rules incorrectly. You have to realize even students studying a textbook and taking lectures will only remember something like 15% of what was taught, and probably 30% of what they remember is incorrect. Most people are not A students. Most people are sort of B- students, which means 90% of everything said is either forgotten or incorrect, right? So I got to paint pictures that you will remember. So instead of saying, oh, well, 3 touches and then do something, how did I describe this so that you would remember it in a positive way? What's advice for you? What are you new to? The channel, to me, to trading, to currency trading? Okay. Yeah. The analogy here is the Forex market reverses like an old man easing into a hot bath. The analogy is, don't expect a V-shaped reversal. It takes time. Higher high, higher low, higher high, higher low, higher high, 100% retracement, double top, 786, lower high, higher low, and then finally breakout, pull back actually is what it should do, and then sell. Okay, there's lots going on here. But to me, the number of touches isn't actually important, because if you triple bottom first, all you're telling me is support, and you're telling me consolidation at the same time. So now I would actually trade that quite differently. And I bet you whoever's taught you that advice, like everything else, at best is a B- trader, right? And probably read it in some B- trader's book, and probably gave you advice that may not actually be valid in the real world. And then on top of that, because we're all susceptible to this, there's a chance that you misunderstood whatever they were saying, right? Like, not that you're, like, we all do this, right? It's just part of the statistics. So on an aggregate, it may be poor advice that the author got from another person who gave poor advice, who got poor advice from someone else. Now it's in this book. And then when you read it, just like, have you ever played that game where you whisper something into someone's ear and then they whisper a story, right, into someone's ear, and you whisper a story into someone's ear and it goes around 20 people and then the last person tells the story and it's a completely different story, right? So all of a sudden we got 100 years of factual statements of a triple bottom's better than a double bottom, and it's completely stupid. So that's all. So if I didn't say it, Greg, it doesn't exist. Now, that sounds arrogant. Now, it might exist, and it might be actually good advice, but I'd say don't worry about it. So if something, I'm trying to think of a way to do it, right? There, to me anyways, there's difference if oops, I'm trying to do this in red. Okay. If the market does this, okay, I've already changed. Okay. The big clue here, okay, the big clue, let me get an arrow if I can. Hello, can I have an arrow, please? Thank you. All right. The big clue is this: 100% retracement. So a triple top is failure for the reversal, but there's also a failure for the continuation. So a triple top to me is not better. Okay, is not a better setup. Okay, because this one was supposed to go like this. Oh, that's terrible. You can't see that. This one was supposed to go like this, right? So the fact that we got 100% retracement and no higher high, holy snicker-schnucker, that's a big problem. So you're like, oh, so it's going to be a reversal. So what's the next probable scenario if the market reverses? You see that? What is the chart? Which currency? It doesn't matter. I'm not talking about this currency. It's gold, actually. This has nothing to do with gold. This should be a blank sheet. I forget I can turn this to a blank. Now you can't see that. How do I blank it the other way? So when I do this, for some reason, it decides to block the whole entire computer. So now I can't see the chat. But anyways, that one of these is supposed to happen. So now to go to add a tertiary scenario, I know, right? My wife goes giddy when I say tertiary. You sound so Canadian. I am Canadian, eh? You know, this only predicts this to me. Okay? Triple top, quadruple top, 5,000 top. It's just not a trend. What time frames? Every time frame that you're looking at. So remember, every time frame you're looking at is true. Okay? Part of fractal geometry, let's go back to black and let's make this a little thinner. Oops. Okay, fractal geometry. So now I have to go back, but then I can't see the chat. See, that's the problem. Well, let's try it again. All right. So, fractal geometry. Fractal geo. Okay? What that means is if you look at a picture, let's say, and there is, data on this. That's all a picture is a data, right? Every pixel contains all the information of the entire picture. So remember in, like, what was it, 1981, we had Blade Runner, and the guy says, he's looking at a picture and he's like, zoom in, and it zooms in, and now you can see a little closer, and then he says, look to the right, and it looks to the right, and then zoom in, and he can keep zooming in and zooming in and zooming in, and it keeps coming up perfect resolution. All the information is in every pixel, and the more you zoom in, the more you retain 100%. Okay? That is happening on your Forex charts. This chart, okay, is simply price and time. Okay? What price is it now? It's this price. What time is it? It's this time. So if I change from a 4-hour to a week, let's use a more basic setup, right? Okay, so now I'm on a weekly chart. Every one of these is a week, right? The same price, the same time. So now all we're doing in the similar fashion as the Blade Runner movie, and if you haven't seen it, you probably want to watch it. It's an epic movie. Okay? You can then you can zoom in a little bit. It's the same price and time. You can zoom in a little bit more. Same price and time. A little bit more, a little bit more, a little bit more. We're just zooming in closer and closer and closer and closer and closer and closer and closer, but it's still price and time. So which time frame is the technical analysis valid? Yes. Right? Oh, cool. Well, if you're new, please subscribe and come here every day. The webinar starts 7:30 in the morning, Monday through Friday, every day. It's perfectly free. And while you practice and learn how to trade currencies, please visit tradersway.com, open up a demo account. And then you can download MT4 from your back office. And then you can, underneath this video is a link to download all my chart templates. You can put them all into your MT4. And then just come here every day and be involved, ask questions, treat your fellow community members with respect, and I will do my best to help you. All right, so what time frame does the technical analysis work? Yes, which means, I'm being facetious, of course, but all time frames, and all time frames are correct. So now, which time frame do you use? Well, it's strategy. The difference is strategy. Are you, like an investor would make a decision, an investor would want to be in for months, maybe years. Okay? You can see nothing has happened in gold for years. Years and years and years. Nothing's happened. For an investor, right? Very stable, very low volatility, everything is great. Now, you might not be an investor. Maybe you're more of a trader, where you want to be in for, let's say, weeks, maybe a month, maybe less than a month. Okay, well, now you move in and you zoom in, and you're looking at support and resistance lines. I mean, they're valid on all time frames. If this is resistance on your 4-hour, it'll be resistance on your 15-minute chart, and that's why I mark these things. Okay, so if you're a bear, these would be levels in which you might consider selling. If you're a bull, these are levels in which you should consider taking profit, because you know bears are going to sit there. They live there. That's where all the orders are. so on and so forth. And you should also take a look at support. Say, well, this was support, and that was support, and this was kind of support. So that might be an interesting thing in the future. Okay? In the future. On a 15-minute chart, that would be interesting. On a daily chart, that might be interesting. And so with this, right? And so with this, and so with this. Okay? And then you continue moving deeper and deeper. Well, what if you just want to day trade? Would you trade a 4-hour chart if you're day trading? No. I like 15-minute charts and 1-hour charts when day trading. So I would then look at here. But do you see that if I was day trading, this is still useful, valid information that I should put into my trade plan. If I wanted to be a bear for the next 24 hours and this went up here, does it mean sell? No, not necessarily. But what if you saw a reversal pattern at that price? Could you sell this? Is it the reversal pattern that you're selling? Not at first. The first part is you did analysis on higher time frames, and you said, well, I believe, based on my analysis of gold, this is resistance. Cool. So is that a good place to buy? No. May it be an opportunity to sell? Yeah, it might be. So what would put you in? Oh, well, a reversal pattern at the price you would expect would indicate this is a good time to sell. Now, here's the thing. If you're only looking at a 15-minute chart, you didn't know this was resistance. You see? There's the difference. If you didn't know, then you can't set it up. So what I'm saying is, even though we're down here and it's rising, okay, an amateur would be buying this, and a professional is waiting to sell. Okay. So all of these patterns work on every level. And it's not just patterns. I shouldn't have said patterns, but support and resistance has nothing to do with the time frame. Okay? And that support and resistance is going to come down to strategy. That's a bearish zone, whether you're on a 1-minute or a 1-day chart. So the first thing you need to do is get really good at spotting support and resistance. Then the next thing is you're going to need price action to confirm or deny respect of these levels. Did it reverse at the exact price you were looking for? Yes. Well, then it's a good time to sell if you're already looking to sell. It won't convince you of it. You should already be looking to do it. And you say, my analysis says this might be the right price. Now I need the right time. And now the pattern, let's say, a reversal pattern or just price action. Forget the pattern part. The price action will confirm now's the right time and you're at the right price. Okay? So what time frame? Yes. Yeah, well, that whether you're buying or selling, that's a great opportunity to sell. Are you day trading at bear? Not bearishly, beary. Is it a day trade? That's fundamentals come into play even at a higher level than looking at like a daily chart. It tells you why the markets are moving. Often things happen fundamentally that create change in the markets that you will not see on your chart. And all of a sudden, boom, it's happened. It gives you strength in believing in trend and conviction in maintaining bias. Okay? What, right? So like, let's move over to like, is there an Aussie here? Let's go back to an Aussie. Aussie, Swissy, I don't know. Okay. All right. You could have been short Aussie. Okay. Since, let's say, that time frame. I'm not saying this particular pair, because actually Swissy has been weak for a lot of this too. But in general, if you understood the fundamentals, and by the way, their central bank comes out and just tells you. Reserve Bank of Australia will just come out and say, we are not confident in our economy. These are weekly candles, guys. And that fundamental bias gives you the strength to stay a bear during these upward moves. Because you're like, look, it moved up for 2.5 months. And you're waiting. Do you remember that example we talked about earlier? The kid comes off this line, yay, right? Now he's got to walk back up the stairs, get in line and wait. So do you have the patience to wait for the next slide? Look, it went up for another 2 months. So fundamentals, understanding what the RBA is saying is very helpful to say, yeah, this has been up for 2 months. Can't wait to sell this. Oh, hang on. Wait. Barry, and what did you think of the... Oh, I was going to do that. I was going to do that now. Thank you for the reminder. Where is it? Porn. Oh, this one. Okay. This is federalreserve.gov. I know you spend a lot of time on this website, so I'll be brief. If you want to rewatch the FOMC press conference or actually read the word-for-word transcript, it's available on the homepage. Okay, cool. Now you go here, monetary policy. We're macroeconomic traders. We're interested in monetary policy. Okay. By the way, if you don't understand commercial banking, fractional reserve banking, monetary policy, right? If you don't know the difference between the discount window and the prime rate and the Fed funds rate, you need to take the fundamentals course. Okay, cool. So anyways, this is something basic that you should do all the time if you're a professional. Anyways, monetary policy. Cool. Now you go to meeting calendars and information. Cool. You come here. January, done. March, done. April, May. Oh, that's the recent one. There's a press conference. There's a PDF, HTML. Great. Go over here. Oh, here's the meeting minutes. I'll take it in PDF. Thank you. Thank you, Federal Reserve. There it is. Oh, what? Oh, snap. You what? What? This is actually what they discussed. It actually tells you about the staff presentations. Oh my God. In their discussion of a proportional portfolio composition, participants, wow, like they're just getting into the weeds, but now you can figure, they don't actually like he said this and she said that. They talk about there was a discussion of developments in financial markets and open market operations. If you don't know what an OMO is, I don't know how you could be a currency trader. You need to learn these things. If not today, someday. Now, I sound pissy again, so I should be careful. I apologize right now. But you need to know this stuff. I can't emphasize it more Maybe not today. Like, it won't make you a better trader today. But if you're going to be a master of your domain, and if you're going to be an expert in this subject matter, this is elementary. So anyways, you should say, oh, cool, here's the OMO stuff. By the way, this is so important. It's the first thing that happens at an FOMC meeting, not on Tuesday, not on Wednesday. The first presenter at the FOMC meeting is the dude that does the Forex stuff. How awesome is that? They're like, update us right now on Forex. Once we get that taken care of, next, bring in the economist. Have him babble about some sort of chart he came up with. You know what I mean? Let him babble about some model that is going to tell us nothing. Right? So anyways. Okay, so the manager also reported on developments related to the open market operations. In light of the declines in interest rates since November last year, principal payments of the Federal Reserve's holding a right? So you say, get on with it. So now you can go through this. What are they talking about? The Treasury General Account? Remember, have you ever seen things on YouTube? They're like, the Fed is all secret. It's run by an Illuminati organization, run by the Russians and run by Israel and run by Nazis and it's all a secret society and you never know what's going on. You're like, really, dude? The deputy manager reviewed developments in domestic money markets. Reserve balances declined by $150 billion over the intermeeting period, which was just 6 weeks earlier, and reached a low point of below 1.5 million. Like you can actually look at their balance sheets. Like whoever said the Fed was secretive has no idea what they're talking about. Not only do they publish their information, it gets audited. So I don't know who said the Fed is run by Nazi zombies in bikinis, but it's not true. Just the heads up. All right. Staff review of the economic situation. So this is where the head of all their quants, the quant of all quants, presents, I think it's the Green Book, right? Anyways, they come out, and this is where they tell the Federal Open Market Committee, because remember, they're in charge of their Fed, right? There's 12 Feds plus the Board of Governors. So someone knows a lot about San Francisco, someone knows a lot about Chicago, someone knows a lot about Kansas City, right? And they compile that information, they put that into the Beige Book. The Beige Book goes out, and it gets distributed. Great. But now the person in charge that has gathered all this information comes out, the economist, the chief economist of the Board of Governors comes out and tells the Federal Open Market Committee the state of the U.S. economy. Did you know you can just read this? You're like, well, I'm not an economist, but when I was reading the chief economist's review of the American economy, he pointed out some very interesting facts that I think we should consider in our trading strategy, right? Like, oh my God, they just print this for you. Do you have to have your own quant? No. Do you have to go out and hire PhDs and statisticians? No. Do you need to know economics? No. But I think you should probably just read this, because how many times do you hear people on TV and they babble about their opinions and stuff? I'm like, I don't care about your opinion. But if you happen to be the chief economist at the Federal Reserve and you got hardcore data provided to you by all the different Federal Reserve banks in the system provided, and then you take all these top-notch quants from Carnegie Mellon and MIT, they all come in and they say, this is what we think is happening. Oh, look, it's distributed to you for free. But how many even professional traders haven't even read this? It's shocking how quickly you can be part of the Illuminati if you're willing to do the work. And by the way, This is not much work. Staff review of the financial situation. Whee! Nice. Look, here's the economic outlook. The projection for the U.S. economic activity prepared by the staff for April-May FOMC meeting was revised up on net. Real GDP. By the way, does that sound good? The projection for U.S. economic activity was revised since the last meeting up. Does that mean the economy is doing bad or good? A quant is simply someone that can do quantitative analysis. So I just took a 16-week class in quantitative analysis at Harvard. And so I can bust out standard deviation calculations and 10,000 times more complicated stuff than that, right? All right, so it's good, right? But like, this is what I'm saying, like, your average normal trader, and none of us here are average, by the way. I would never insult you that way. They will babble about some nonsense they heard on TV from some talking head who probably wrote a book about the three-touch rule. When all you have to say is, I don't have a PhD in economics, but I did read the staff projection by the Federal Reserve Bank. And the chief economist, who does have a PhD, said this. Since March, the U.S. economy, or the U.S. economic activity in the United States has increased. All of a sudden, like, dude, you're some top-notch trader now, right? Just to communicate that way? Real GDP growth was forecast to slow, but it didn't. Projections for real GDP growth over the medium term was revised up. Primarily reflecting a lower assumed path for interest rates. What else do they say, guys? They believe the stock market's going to go up. And they believe the strength in the US dollar is going to slow. Holy crap, dude. Did anyone just like fall out of their seat? Like, they're telling you massively important information. The stock market's going to go up. The dollar's not going to go up. Maybe even fall. Now, it's hard. I don't think it'll fall because the yield differential is so high. But anyways, has the US dollar been sort of losing some of that momentum? I don't know. But like, oh my gosh, guys. The staff's lower path for interest rates reflected a methodical change in how the staff sets its assumptions about the future path for the Fed funds rate. They're telling you very, very, very specifically, we are not raising interest rates. The stock market's going to go up. The dollar's going to weaken. How do you think wealthy people get stinking filthy wealthy? And stinking filthy wealthy get to the FU money? Right? I always like those the drug dealer shows on Netflix, right? He's like, You're bribing the police? I got the army! And like helicopters fly over and 1,000 soldiers show up on trucks. He's like, I got the army, man. Come get me, biatch. I got the army. That's FU money, isn't it? So how do you get FU money besides selling drugs? I don't know. Having very smart people manage your money for you. They're so smart, they can read one paragraph every 3 months. But anyways, this is too difficult. I don't mean to throw this at you. This is way too much work. You should probably avoid it at all costs. This is useless information. Run away. I'm sorry I even brought it up. What was I thinking? I wasn't thinking. I apologize. So here we are. FXBootcamp.com. FXBootcamp.com. Well, sir, I ain't no economist, but the chief economist at the Federal Reserve Bank said just the other day that because of their low interest rates forever policy, the stock market's going to go up and the dollar's going to lose value. So I thought we should probably put a strategy around this because their outlook lasts probably, in the next few years. So why don't we get in on this? Light the cigars, right? Now you're smoking $100 bills. Getting your yellow Lamborghini. Well, then I did my job, right? PM says, hey, thank you, Wayne. I'm going to read this from now on. Then I did my job. Good coach. Line it up. Yeah. Yeah, drop the mic, right? All right, I'm done. Well, yeah, but you know what? 2,000 people will watch the video and 98 people will like it. What the hell does everyone else do? Well, I don't understand the excuse, but I guess everyone that does YouTube videos asks, would you please like, would you please subscribe, would you please comment? And you get sick of it and it's repetitive and you don't even listen to it anymore. But, someone has to spend an hour and a half every day knowing this. And then on top of that, I had to spend 20 years to get this knowledge. It's not like I'm playing Minecraft or Fortnite. It took 20 years to get to this point. You know what I mean? So, that'd be nice if you could, Okay, so anyways, enough of that. Let's do some trade plans. Hey, look, dollar's weakened recently. That's weird, right? Now, this was our trade plan last week, right? How many people can confirm that? That the trade plan last week was this would go up. Oops, I wanted this blue. The trade plan last week was this would go up and then this would go down. How many people can confirm the blue? Last week. That's epic. Check that out. I guess I can't do it now. There's us, baby! Which is funny because you're just seeing it now. I've already done it. Huh? Talk about planning your trades in advance. Yeah. So lots of people confirming. Nice. So how can you possibly know this stuff in the future? Well, you have a bias. How do you get a bias? Fundamental analysis. I just Gave you one little example. Last week, or well, I guess on Tuesday, we did commitment to traders report. There's another tidbit how you can do these, right? I keep telling you, like, go to the RBA website, see what Australia tells. You know what Australia said? Yeah, we'll probably cut interest rates. But why don't you go find that out, right? Go do it. Okay? All right. So, and by the way, this is all on top of interest rate differential. This currency pair is brutal, I believe, on the downside. So you want to day trade this down and swing trade it up. Yeah, when am I going to set up the rig? It's right there. I haven't even opened the box. I've been too busy. Crazy, right? But it's right there. I haven't even cut it open to look at it. Okay, so anyways, let's see if there's any interesting thing. This is the be careful area. I mean, should we just rip through beast? Let's do a beast. You guys probably have this on your mind. I hate to focus on currencies that have little to do with normality, because I'm more interested in teaching you skills versus putting you into trades. Okay, that I'm very concerned about if I do the training wheels application for you, and I'll probably write out the doc today for the programmer. My number one concern, and the reason I've never done something like it before, is that you shut off your brain and you start like looking for trades or signals or whatever, and you use it inappropriately. I only like the idea where it gives you like a general suggestion. I mean, well, specific suggestion, but it's more of an example of how to put together a trade plan on a very basic level. So every day it's like, by the way, when something popped up, every day at 5:01, you got an email that said, ching, here's the trade plan for the entire day. Now, you might not get an entry for another 8 or 9 or 10 hours, but this is the plan. And it's a way to say, dude, people are doing this. And you're supposed to be doing this. And it may be the part that you're missing. If you can't see it 8 hours ahead, dude, how are you going to trade it? I can't imagine not knowing what's happening tomorrow. How could I possibly trade profitably if I didn't know what was going to happen tomorrow? See, if I know, which is my certainty of my analysis, I know what's going to happen tomorrow. And if I'm wrong, I know I'm wrong very quickly because I could say, what the heck is that? Holy smokes! Should be like a slap in the face. Right? It's got to be obvious. It's got to be obvious. If you're speaking to a pretty woman and she throws her wine in your face and you haven't noticed, you have a social problem. If you put down a failed trade plan and you haven't noticed, you have a trading problem. And it should be like liquid on your face, red wine on your $300 beautifully woven cufflink shirt. And you're like, pfft. Okay? So anyways, we'll go on that. We'll go with this. Okay? Now this is the only one that I think is truly interesting because this sets up the counter trade, which takes us back to the central pivot. Now that's out of the swing trading course, so you don't need to go out of that. You should know it. If you've taken the swing trading course, you know that trade. But the interesting thing is it also represents that they're both weak. It's just recently pound is weaker than Kiwi, but they're both dogs with fleas, right? But the nice thing about swing trading, there's a counter trend. There's the next week's trade. This is the next week's trade. This week's trade. This is the counter trend, and your target is the black line. Your weekly trade last week was this, which we hit it. We hit the target on the last 4 hours of the week. And then this week, once again, just straight up, obvious, can't miss it. 3 points, nothing but net. High flying, death defying, 360 slam dunk. Or, right? Just like, there you go. So that's that one. And you're not going to see too many other examples of that because it just turns out Kiwi is so pathetically weak. Okay? The swing trade for the month on this one is this. Okay? So on the last day of last month, right, we were here. The trade plan is here to here. So it went a little higher. And then it, by the way, it only went to the weekly entry. And then it went lower. It went a little farther than we thought. We were too right. Tough problems. But you had to be a bear on pound. Well, who would be a bear on pound? That's ridiculous. Okay? By the way, if you're not sure about swing trading, let me just quickly highlight the swing trades. This predicts that. This predicts that. And this, you didn't get an entry. Sorry. Now, staying in longer has to do with what someone else asked about recently and like, you know, the fundamentals. Well, the fundamentals give you the courage to not buy British pound. Now, who buys British pound when there's obvious risk? Someone only trading a 15-minute chart or less, or someone that does not even on a basic level fundamental analysis, most likely a gambler, right? What if you simply said, oh, Brexit poses a risk, so I'm going to be a bear starting here. That might be helpful, right? Okay. So now you use technical analysis, and there's lots of different like smaller trades. There's a sell, there's a sell, there's a sell, there's a sell, and then this this is shields up red alert, and then this is caution. Okay. But that's a sell, that's a sell, that's a sell. This is a breach. This is caution, right? Right? This might be a sell off of resistance, so you'd have to have it as a range. Tough, tough, tough. This is a sell. Okay. Right? You have to have it set up as a range. I think it's like, essentially it's this. Should have been black. I wanted that to be black. You should just read my mind. How come it doesn't read my mind? It goes even farther back than that. Yeah, that's basically it here. So you could consider this a top, top, top. The double top, fine. See, no triple top, by the way. And then I wanted to point this out, like the real entry here, if you're using sort of price action in your analysis, the real entry is not the double top, it's this. Okay? Remember I just talked to you, the old man easing into a hot bath? Remember I talked about the 100% retracement being the red flag? So now you expect the lower high? Yeah. So there's the sell, there's another sell, there's another sell. This probably knocked you out. Okay? And then there's another sell. These are obvious entries there, and there. So whatever. I'm trying to say is there's a lot of reason where you might not have faith in the British pound because of the additional risk associated with Brexit. It's not that complicated, right? You're like, well, with Brexit, I don't really know. Cool. I think this opportunity is you should go to London and start buying depressed real estate. Find someone who's desperate to get out of the UK, probably because they don't live in the UK. Maybe there's some Dubai prince that has a ridiculously expensive apartment in London and they want out. Oil prices are low. Daddy told them to come home. And no one wants to buy it, so you buy it at 40% discount. Plus, the pound is weakened. So now you get a big discount there. You're buying it for 40% off and 30% off of the 40% or whatever it is, and sit on that for 30 years. Is it too risky? I don't know. It just made me think of it. Like if you want to live in Mayfair or whatever it is. But you'd be surprised. There's so many like princes in Dubai. A friend of mine met a kid, I don't know, a 30-year-old dude or man or whatever, at a bar. He was, and his dad was a prince or something. And the way that it works there is when you become of age, so you graduate from school, you don't get money. Your dad gives you a business. But you don't want to run it. You don't care. Now, each business makes, let's say, $5 million a year profit. Maybe 50 million, right? You got to think bigger numbers there. 50 million. So he's like, okay, son, here's a business. You now are the CEO of an industrial lubrication company. It's sort of a particular type of refined oil. I think it's sort of a byproduct of fracking and all that, but you get this sort of weird oil. Like, what could you possibly use this for? It's not nice enough to use inside engines, but if you were retooling a factory, the machinery uses this kind of stuff, this lubrication, right? Great. And it makes $50 million a year profit. And he's like, oh, good, thanks, Dad. Now he hangs out at a bar all day and stuff, and he drives his Bugatti, and he has to live on the 50 million. Never goes to work, never does a speech, never goes to board meetings. Not only does he not want to do it, and he has no sense of work ethic, but it's embarrassing for him. Like, oh my God, I couldn't possibly. What a horrible, filthy thing. So he has to, but his stipend is he has to find a way to live on $50 million a year. So anyways, so he was talking to my friend. My friend's like, he had a problem with the company and the company wasn't being run well, maybe because he'd never seen it. So my friend said, oh, I can do that for you. He's like, really? Would you do that for me? Yeah, pay me $5 million. He's like, oh, okay. Yeah, that sounds good. And just like that. So like, there's times where like, I got a boat, my dad really doesn't want it and all that kind of stuff. Oh, well, I'll give you 20 mil. And he's like, oh, okay. Well, it's a $48 million boat. 20 million, whatever. Just whatever. Just give me the cash, right? Whatever. So you could probably get an apartment in London. Like, oh, yeah, I don't even know how much I paid for it. I don't even know. But I need some cash. Oh, I'll give you 20 million for that $50 million apartment. Oh, yeah, that sounds good. So you got to keep your eyes out, guys. You got to keep your eyes out. It's no joke. My friend bought I can't remember what it was. It was like a $48 million boat for $13 million. Kid just like, I don't know what to do with it. I got to get out of this. I'm supposed to, I don't know. My dad doesn't want me to have it anymore. Oh, I'll buy it from you. Oh, really? Thank you. Got to get in on it. So at some point, it would be nice if you could say, here's my track record, and here's the skills I bring to the table, technically and fundamentally. I can manage your money for you. I will watch your money day and night. I don't fear the hard work. I'm empowered by the hard work. Yeah, Joe, it's absolutely true. There's people walking around with such large sums of money that just millions of dollars are just falling out of their reach and they don't even notice. They need a money daddy. They need a money mommy. Might as well be you. Might as well be you. Okay. I think we'll leave it here, guys. I went on a little bit today. Apologize for that. But we covered a lot. That was a good day. Tomorrow's Friday. Now, Monday's a holiday, so there won't be a webinar Monday. But if you subscribe when I do have another, you'll get invited. So subscribe. So I'll invite you to the webinar tomorrow. Monday, there's no webinar. Tuesday, there will be. Wednesday, there will be. Thursday, I'm in Cambridge getting my degree. Friday, I'm in Cabo San Lucas getting a tattoo around my belly button. But then that following Monday, I will be back doing webinars. Okay. And yes, it is Thursday. So remember, if you can't see Monday's trade today, you're not going to be able to trade it Monday. So start planning things out for Monday already. Okay. So again, please visit tradersway.com. Open up an account. They made this webinar happen. You need to pay it back. You can download all my chart templates for free. It's in the video description below. If you need training, fxbootcamp.com. The website's like 16 years old. It's real nice. It's good information. And without further ado, if you want, there's 4,000 videos on YouTube associated with my work, either at Traders Way, at Forex.Today, or at FX Bootcamp, right? So you can go like youtube.com/FX Bootcamp. It's all there. Feel free to watch them all. There's one on the Mexican peso, which we're going to do next week. And without that, thank you for liking and subscribing and commenting. Please like, subscribe, and comment, and I'll see you tomorrow.